Welcome to the MHP Exchange, where the riches are in the niches. We'll show you how to invest your way into mobile home parks with real strategies, tips, and behind-the-scenes know-how to grow your cash flow. Stick around. This is where smart investing begins.
Welcome back to the MHP Exchange Podcast, and I'm joined today with a Wharton MBA, somebody who could have done anything, and instead he spent 3 years buying 16 mobile home parks, turning distressed, overlooked communities into profitable, affordable housing, manufactured housing communities. He's someone who's really focused on the turnaround and someone who I've gotten to know over the last few years and call a friend. I have Larry Abramowitz from Broadview Communities. Larry, thank you for joining the program today.
Thanks for having me, Frank. See you again.
Great. Larry, before we get started, and there's a ton of questions that I want to ask you about how you're operating your businesses, how you're looking for deals. How did you pivot your way into the MHP space to start with?
Been doing real estate since 2014. Started, I live in Miami, but I started buying here foreclosures locally and did everything from single family land, apartments, industrial, office, retail, buying everything I could that was on foreclosure. There was a deal. When that market dried up, I looked into the next asset class that I wanted to be in, and it was multifamily. I just wanted to be in a space where I will have a more diversification on the income, with more tenants and consistent demand, and got into multifamily. Did my first raise of capital to buy that deal, bought 108 units in Daytona. Ended up selling that in 2020. And I tried to buy more deals. Cap rates were compressing tremendously in multi, and I was looking for another asset class where I could get, better returns. And somebody told me about mobile home parks. Went to the Mobile Home Park University in I believe it was 2019, and I bought my first park in 2020. It took me about 6 months to really find my first deal and start in the business. And after that, I just started. The first park I bought was in Wichita, Kansas. I was basically there one to 2 weeks every month, living in one of my homes in the community and learning the business from the ground up, turning the park around, bringing in homes, demo homes, remodeling. And once I got the hang of it, then I started buying more parks. I saw that I needed to scale to start building a team. And today we're actually at 18 mobile home parks.
That's a lot of scale in a, really in a decent amount of time, but in a short amount of time. But when you first stepped into buying parks, your first park, though, it was a turnaround. I mean, I think most people look for something that's a little bit of a lighter value add, but you are truly looking at deep value add turnaround situations. I mean, what was about that park that drew you into it, where you saw value and maybe other people didn't?
I mean, all the deals that I was doing here locally were all deep value add. There were always had issues with violations with the city. There were all turnarounds. Deals that needed a lot of work to be able to make them work. So I was used to doing that type of deal, and for that, I mean, higher risk, higher returns, right? So I was used to getting very high returns. And when I started looking at mobile home parks, I also started seeing low cap rates. When I started looking at deals here in Florida, so I started looking at other states, and wholesaler offered me this deal. I didn't pay attention to it for a while because it was only like 10 occupied sites, Wichita, Kansas, where I'd never been. And he insisted for me to look at it because of the location, and I saw it was next to the best school, one of the best schools, public schools in Wichita. The park is fencing the school, so once I looked at, when I went and looked at the location and what was around it and the value of the homes around it was in the 400,000 or higher. I mean, it was a really nice suburb in Wichita, so I decided to take a trip there, went to look at it, and pull the trigger. I mean, that was kind of my first deal. I saw the potential.
That's a key point, and you hit on something earlier where you talk about, if you want to be a value add investor, you have to be able to do that work. And I think there's two ways you create value. If you're, the Carlyle Group or Apollo, you could create this financial, you have this financial creativity, which adds value to your purchase. But if you're an operator like yourself or like us, you have to be able and willing to do the work. And then you have to look at those deals a little differently, whether that's infill, whether that's rehabbing homes, whether that's some levers that you could pull inside that park to make that, to make the numbers work better or make the park more efficient. Is there something specific that you look at? I know you mentioned the market. Is that the biggest driver before you look at a park, or is there something inside that park as a lever that you can pull? Do you say this kind of fits the profile of something that'll work for Broadview or for yourself and your stakeholders?
I mean, it kind of changed what I look for today than when I started. I mean, I would say that I used to do more deep value add before. Now I'm looking for, I would say, more stabilized assets. As you buy more and more deals, you start learning what you want and what you don't want. I can probably say what I don't want, but today I wouldn't want to buy another park with just 10% occupancy, unless you're in a really, really amazing market where the demand is so high that you can fill it up very quickly. I've learned infill is you can add a lot of value to a park, but it's usually the hardest thing to do in a deal, bringing in homes and actually selling them at a rate or at a speed that you can turn around the deal quickly, and it does take a long time to buy the homes, prepare the site, set them up, and then you gotta set up the financing for buying the homes or for flooring them, and then you need financing for your residents to buy it, and it's a slow and long process. So
a lot of logistics. I mean, it's the set, you got the mover, you got the plumber, you got the electrician, you got the county or the city, the inspections. There's a lot of moving parts to get that infill done and done right.
It's really a development. I mean, when you look at a deal, I mean, and most of these utilities are old, so you usually have to redo the utilities in the lot. So you end up doing a brand new lot or a brand new development for every home you bring in an old park. So it's, what I love to do is, find parks with rents on their market, where they're not building back utilities, where we can improve the community by paving the roads, doing landscape, just fixing or demoing any old homes that are abandoned, and just bringing up adding street lights, signage. That's usually what we do when we come into these deals, and we start bringing rents to market, build back utilities, and start infilling. I mean, but then ideally, I don't want to buy again parks that I want to be at least 70% occupancy going in, so you still have some meat in the bone, but it's not a full-time job project just to bring in 30% of the remaining vacant lots.
Got it. We found that when you look at those communities, if you have a community that has more of those lots physically occupied, even if they're vacant homes, but they're habitable homes, and you have to fill that up, you could be in markets that are a little bit more stable. They don't have to be growing, right? You can have markets where there's still a need for affordable housing, but if you have to bring in new homes, you have to have that delta in pricing between where you're going to sell those homes for and what a traditional home is. So when you talk about Wichita and the median sale price is $400,000, that's a market where you could bring an infill if you're selling homes between $70,000 and $90,000. But if you're in a market where the median sale price of a traditional home is like $120,000 to $150,000, doing an infill project is is a futile effort. You're never going to be able to sell a home in a community or at a pace that might be necessary to create that value, right? If in your business plan. What you say you've changed now. Are you still buying in that, Midwest market? Have you expanded into other markets?
We're in South Carolina, North Carolina, Florida, Kansas, and Illinois. I mean, I like the Midwest. I think you get, lower cost per lot, and in some areas you get similar rents that in some of the Southeast markets. But again, what we're focusing on right now is Southeast, Midwest markets. Usually, we want to stay in MSAs over 75,000 population, stable or growing with good employers. But we see, medium home price, ideally you're 200,000 and higher. So you do compete better. I mean, when you want to sell a house, you're going to be hopefully half the price of ownership than a stick built. Rents, you want to, when we look at 3-bedroom rents, we want them to be 1,500 or higher in the market, because if we do bring new homes and we need to rent them instead of selling them, I mean, we want to be able to rent them for at least $1,200 to make it worth the effort of having these homes in our inventory and renting them. But again, that's the main criteria that we look at. Median income, median household income, ideally over 45,000. I mean, the formula is people can afford 30% of their income in rent. So, you're talking somewhere in the $12,000 to $15,000 a year in rent that you want people to pay. So that's kind of where our sweet spot is if we're renting homes.
Got it. And when you're looking at, this, and obviously you've been at it for a while, Larry, what was that point where you said, this is where we're going to focus on? Because obviously you did come from a background, you were doing you had other asset classes and experiences with that. But what was that, I'm in that first park, which is ugly, which is 10% occupancy, and I'm doing this infill, and you're living in the park, right? Or you're staying in the park, right? And I think the best operators have spent a lot of times in the communities, down on the ground, really getting a sense of what's going on there. Like, what about it clicked with you and said, hey, this is where I need to focus my time, energy, and attention? Because for most people, getting that boots on the ground, there's a lot of people who say, you know what, this isn't for me, right? It's a different mentality. What was it that kind of drew you in?
I mean, I like the high returns when you're buying these deals. If you execute, I mean, the returns are pretty significant, but you get to the point where, I don't know, you don't want to be on a plane every week and living in the parks, and you want to be able to buy a little more stable deals where you can maybe go visit them every quarter, and I guess reduce what I say, the brain damage, right? That you start learning how to buy smarter and how to buy deals that are not going to create a lot of headaches for me, right? We love value add, but we just want to do a little lighter value add than what we've been used to. I mean, and we bought a deal that, one deal last year that was great deal going in paper, because we paid a very low price per pad for a large park. But again, it was the same thing, 10% occupancy with all the homes there that needed to be remodeled, that were all abandoned. And it's been a real project. I mean, this thing has had our team, put a lot of effort in our team, and we kind of lose track, or you start having all your team focus on one deal instead of of being able to manage the whole portfolio in a more efficient way. So it pulls a lot of your resources into one project, which is it's usually not ideal. I mean, it all depends what right now, or like I said, after that deal, once we finish turning it around, we want to start focusing on more stabilized assets.
Sure. I want to talk about your team, because we've talked about this offline. I think you have a great setup in terms of how you marry kind of three different worlds, right? But how are you set up operationally on the ground, back office? How are you set up to scale to get to 18 parks and manage a portfolio like you manage?
Important to have boots on the ground. So we have managers. Usually, what we do is we have multi-unit managers. So we have managers managing typically 3 to 6 parks, where they visit them depending on the need, either weekly or monthly. I mean, some parks don't need, you don't need to be there more than every quarter. And then we have a backup office. I mean, we have a COO that manages all the operations that's in the US. And we have all the back office team in Colombia, South America. So we do there all the accounting, accounts payable, operations support, leases, bills of sale, all the documentation, title work, marketing and sales. So we're trying to run more and more all the processes remotely, so we can help the managers to just be more efficient on site and really do the value add work when they're there.
Yeah, and that's a great point, because I think your property managers, like, I think every property obviously needs a manager, and your manager who's good can do more than one property. So we tend to look at, if we have a really good ground team, we know that there's a radius in which they could be effective. Like, we found if they go beyond 35 minutes in that radius, it's challenging, because if they have to go back and forth during the course of a day, it's problematic. But your managers are doing so many things. Like, there's 4 roles that there multiple roles that they have to do, but backing it up with a VA, almost making them the assistant for the, that your manager has an assistant, makes them so much more efficient. And I know, we spoke about this. You've had a team for years, and you've kind of intertwined them together, right? Like, they're working where the BA is almost like the assistant for the manager on the ground to help them execute. Correct?
Correct. Yeah, they're part of our team. I mean, they have specific roles, and they're part of our team. And we have weekly meetings and daily meetings with the managers. And yeah, it works pretty good.
So your ground team being your manager, and then your back office team in there overseas, but you've been also integrating AI into your everyday operations, which I know it's kind of a little bit on the forefront right now. And you've been working with some ways where you could integrate AI into your day-to-day operations. Like, how are you using those systems to create more efficiencies in your operation?
Yeah, we have all the leads going to a CRM, and we noticed that there was very little follow-up on the day-to-day of all the leads. So we were generating a lot of leads, and the managers are doing a lot of different things. So sometimes if they have emergencies, they won't follow up on the leads, or we're getting a lot of leads that were just, we were leaving money on the table. So we were looking for solutions, and we started working with an AI company to do outbound calling. So every time a lead comes in, the leads are all automated into our CRM from all the syndication platforms. We created a program to import all the leads automatically, and the minute they come in, now the AI calls them. We launched it this week, and it's really been amazing. I mean, with the first day, it made 200 phone calls, and we got 20 appointments set up 20 showings set up by the AI. We're still fine-tuning it. It's not perfect, but it has a full conversation. I mean, it's really amazing. It will have a full conversation with the prospect and figure out, what they're looking for, what market, how much they want to pay, do they want to rent, do they want to buy. If they say they want to rent, we offer them our sales program with financing. So we ask them if they want to learn more about that, and we're getting a lot of interest that way also. So the beauty, it's working 24/7, and it's always calling back all the leads. So we're not missing a single lead anymore. Now we have another problem. Now we have too many appointments, and the managers are saying they can't handle them because they're driving all day long showing homes, which is a good problem to have. And now we have to coordinate how to help them, with all these showings. So we are also looking at Show Mojo, which is these are self-showing lockboxes where we're going to have the AI offer the person a self-showing, and that way the manager doesn't have to drive everywhere to show homes. So we're starting to test that next week. So the idea is to do as much automation as possible. We're also sign up with another AI company to do collections and service calls. So that's probably going to launch next week. We're doing testing now, and that's also very exciting because, again, that's the other phone call that a lot of people don't like to do is calling to collect money. So the idea is that this system is going to be calling, texting, emailing, all day until the person pays, and put a lot of pressure on people that are late to just improve our delinquency. And the same with service tickets. I mean, when people call in, these are connected to our rent manager, which is our property management system, so it can read the balances and how much they owe. So all that information is linked. And the same with the service calls. If they call and say they need a service, they have a service issue, it will generate a service ticket that will be input into our system automatically.
So how do you think that going forward, that impact, not just for Broadview, I mean, the impact of AI is going to, how are you looking at as the impact just in the property management or the real estate sector as a whole? Where do you see that impact happening over the next 12, 24 months?
I mean, I think it's starting, but it's going to be huge. I mean, just having somebody that can do the sales for you, handle service tickets, handle a lot of the stuff that, we're usually, I would say, not good at. I mean, it will take away a lot of those pain points. I mean, you will become less dependent on a lot of this back office stuff. So you can be more productive, right? Your team can do a lot more or manage more properties with less people on the team, so you can grow more efficiently, because this is seamless, right? Once you buy a property, it goes into our, AI is plugged in, and then it will handle a lot of that day to day. I mean, we're getting, I think it was 200 phone calls a day, and only 10% are being answered by the manager. So we're losing. I mean, it's also you will improve customer service because when you see those bad reviews in Google, a lot of it is the manager didn't answer, and it's they're getting bombarded with text messages, with emails, with calls, with emergencies. So I mean, if we can handle all that inbound, which we're still not doing, we're going to launch next week an inbound sales number, sales and leasing, and then also we'll have an inbound for service tickets and one for accounts payable. But most of the calls are, how do I pay? I have an issue, with my rental, or it's I need to rent, or I need to buy. This answering those calls. So right now we're going to really improve our customer service by doing this. So I'm very excited about all this technology that's coming up.
Yeah, that I think, and if you're not utilizing some of this service into your business and into your operations, you're just going to be at a competitive disadvantage of the people who are going to be able to execute faster. I mean, in the sales cycle, we get a lot of calls, we get a lot of, leads each week. And what happens, we found, is that it's easy from on the sales side. And I've been in real estate sales for 25 years. You always want to deal with the person calling right now. But the person called last week is probably still interested. You just called them at a bad time. And it's tough to keep that. If you miss them that first call, you don't get into that cycle. And then that person this week calls you rather than me. So we've been using systems to be able to get those people that that have contacted us that just haven't been nurtured as much, right? Or been in contact because maybe they weren't ready to move this moment, but maybe in the next 4 weeks, they're ready to go, and utilizing those systems to keep them on the line. And once they become, call it a hot lead, now it could transfer to a live person and we can get them there. But anything you could do to improve especially if you're doing infill, you're doing value add. The key is getting those lots occupied or getting those homes filled. Anything you could do to improve efficiency is just going to move that ball even further. So that's, and I know you've been on the forefront of that. We've had a number of conversations about it. So that's, I can't wait to hear how those results are, because I'm sure it's going to be dramatic, right, in terms of results. So that's, good job on that.
Thank you.
How do you, Larry? I mean, you're building your organization, you're scaling and it's not just about spreadsheets. It's about people. I mean, what's the hardest leadership lesson that you've had to learn about scaling this organization, or scaling your organization to where it is now, right? Like, what is the hardest, the biggest challenge you've had about getting everybody to share into your vision and growing Broadview the way you have?
I mean, the hardest thing is really finding the right people. We've started using the system. I don't know if familiar with Traction.
Yes.
Or manage the entrepreneur operating system, and we started with that this year, and that has been a great help of showing the team our core values, our vision, and really getting everybody aligned, building the org chart again with specific, what is everybody supposed to do. And, it's a consistent theme that you got to keep on, reviewing it and making sure everybody's clear on what they're supposed to do. So yeah, just having clear KPIs with everybody in the team, clear job descriptions, org charts. I mean, just envision and other, we break it into quarters, so everybody has very specific goals every quarter. We review them weekly, and it's we have a full team meeting every Monday, and we review everybody's goals for the quarter, their to-do lists, their KPIs, and it's everybody's part of it. So it's it makes it sorry, I have a lot of background noise here. I don't know if you hear. But
he's not still at the mobile home park. That noise isn't at the mobile home park. That's at his main office.
Yeah, the hospital is 2 blocks up the road, so we get all day long. I hear the ambulances, but yes, it's. But anyways, yeah, that's pretty much what it's communicating that all the time, and it's hard. It's not an easy task.
It's interesting you mentioned Traction, because when we implemented EOS into the organization, before we did it, everybody's works hard, right? It's not a question of everybody in the team working hard. We asked everybody, where are we going with what you're doing? And then you start realizing that we're all working hard, but we're not all pointed in the same direction. Like, we're generally looking in the same direction, but we're not specifically pointed in there. Like, we weren't. And when you narrow everybody's focus in on, this is really the North Star, right? And everything should be looked at from the lens of, this is where we're going. What's the most important things that we could be doing that? Give me a list of 5. Now drop 2. Now just focus on this, right? If we do this, everything else will fall into place. And it's important to do that from an organizational level, and then even taking it down to the community level. Like, this is what we need to do. Now prioritize what you're doing in the park each week, or the community each week, to make sure that we're hitting those quarterly milestones or rocks or whatever you want to call them, because it's so easy in what we do for your people on the ground to get lost, right? Into a million other things, right? Because it's a park, right? You have a 50-acre park. There's a million things to do to keep you busy, but is it the most important thing to do to move the thing forward?
Yeah.
And it's looking at that. And, one of the things I've gotten with our people, and again, this, you talk about learning, I've come in and you see guys and there's an open field in the back of the park and they're cutting the grass. And I'm just like, look what I did. I'm like, what does that matter? Right? That's not moving the needle. Right. So, making sure the vacant homes are clean, right? And it's orderly going there, making sure the amenities are set and ready to go, cleaning the ditches, everything else, right? That's how we've tried to keep everybody focused on from the staff. What about, how do you balance, needs of the resident, right? To make sure the community is running well, and what you want to do for them, to making sure that you're hitting your business plan. Like, how do you look at that from that aspect of it?
Can you be any more specific? Because
I mean, look, you talked a lot about collections and drilling down on that. We're affordable housing providers. I mean, there's, sometimes I know we've got a number of residents that are living paycheck to paycheck, and small little things happen in their life where it could impact them, which in turn impacts us. Like, how do you have a balance on that? Do you have a structure where, hey, this is it, we're willing to work with you here. Here's how we handle this.
I mean, it's tough because you're managing a lot of residents, so you can't start making exceptions. We have to be pretty strict on the rules. I mean, if people don't pay by the 5th, there's a late fee, and then we send the notices, the whatever the legal notices are, and if we can't reach a payment by the time the notice is done, we process evictions. I mean, we usually file evictions on time, and we found out that if we don't, then you lose all that time, and by the time the resident saying they're going to pay, they don't pay, then you start accumulating months of past due rent, waiting for promises. So we've done some what we call STIP plans, where people have to put a down payment, and then we'll let them catch up. But it's most of the times what we find out is that we just have to be strict and stick to our rules and the legal, whatever the legal is in that state, and follow the procedures. Otherwise, things fall behind.
Got it.
It's unfortunate, but yes, that's kind of how we got to pay, insurance, taxes, we gotta do payroll. I mean, we can't just let people not pay. I mean, that's what keeps us in business. So it's, sure. But yes, it is tough. I mean, we are in a tough position sometimes where you have to make some hard decisions on evictions, and it's unfortunately, it's unfortunate, but that's the business we're in, right? It's
100%. How are you finding the market now? I mean, it's been a big challenge. I know that the last couple of years, transactional volume has kind of declined significantly. There's a lot of sellers that have been anchored in pricing or price points that probably aren't realistic anymore, especially with financing the way it is now. How are you finding the market? Are you still finding opportunity out there? Are you still in buy mode?
I mean, we're always looking. We haven't bought anything in a year. After COVID, prices got crazy. Rates dropped so much that people started overpaying for deals. And for every deal out there, talking to some brokers that were saying it was like 50 offers on every deal. It was crazy. Now you talk to them, and I think, maybe they get 5 offers on the deal, or, 3 offers, just because I guess the pricing still doesn't make sense. But I guess a lot of those crazy buyers out there that were trying to get into this business and realize it wasn't that easy, that, you don't have all those buyers anymore. I mean, I think you have more of the same or larger players out there looking at the same deals, and it's very competitive. It's really very competitive to buy, and we're trying to look at deals where we already own, talking to owners directly, talking to brokers, and really trying to focus on markets. But it's been tough. We have offers, we usually put in a couple of offers every month, more targeted offers, and it's the sellers are either not ready, they're still trying to get the same price. Maybe they got offered during COVID that somebody threw a crazy number at them, and they still have that number in their heads, and they just don't want to come down. But I'm seeing pricing settle a little bit, and now rates are coming down again. Bonus depreciation is back. So that also has created, again, some activity in the market of people looking for deals, right? A lot of people want the depreciation. So they're willing to pay, top dollar for a deal just to get that bonus depreciation. And with expectations that rates will come down, some people are buying, expecting cap rates to compress. So you're starting to see a lot of activity again.
I think what we've been very intentional is, let's put out more offers, right? Where last year we might have put out 50 offers. This year, we're going to put out 80 because we realized that to get that same number, we have to do more. So we're trying to put more input to get more output, but while still staying disciplined, right? This is where we need to be. This is the number that works. And in this business, more than any other, I think there's more retrades that happen. And at that point, I've seen a lot of deals come back to us after 2 or 3, iterations of other people peeling back the onion and realizing, hey, this is not what I wanted, but our number is still the same. So I think if you're going to be in this space, you have to be consistent. You have to put in your offers. Sometimes you have to wait, but that's that discipline of waiting to be successful with that. Larry, before we wrap up here, if somebody wants to reach out to you, find out more about what you're doing or seeing how you're implementing AI or even finding out what Broadview is doing going forward, how would they reach you?
They can go to my website, broadviewcap.com, and there's a link there if they want to maybe schedule a call.
Okay, so broadviewcap.com. Listen, Larry, I wish you continued success. I know I'll be talking to you again soon. I love what you're doing with integrating AI into the space, and I think you've definitely been a leader in that. And if you're out there listening, you want more information from Larry Abramowitz, go to broadviewcap.com. You could schedule a call with him. If you found value in this episode, whatever streaming platform you're on, give us a rating and share it. That's how we get the message out to more people. And until next time, everyone, happy investing.